Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a report from MFS Series Trust the XIII, and trust me, it's not as boring as it sounds. Think of it as a real estate roller coaster, and we're about to see if the ride is going up, down, or just stuck. This report gives us a peek into the MFS Global Real Estate Fund, specifically looking at how it performed over a 6-month period. We're checking out different share classes like Class A, Class B, and even some fancy ones like Class R6 to see how their costs and investments stack up. Let's get started. This report is for the period from September of 2024 to February of 2025. It's important to know that this fund invests in real estate companies all over the world. This means its success depends on how well the real estate market is doing in different countries. First, let's talk about expenses. This shows how much it costs to invest in the fund. For Class A shares, it's about $57 for every $10,000 invested. This is equal to 1.8% of your investment each year. The Class B and Class C shares are costlier, clocking in at $93 or 1.93% annually. The I shares are cheaper for $45 or 0.93% annually. The I shares are cheaper for $45 or 0.90% annually. The I shares are cheaper for $45 or 7.93% annually. Now let's check the fund's size and activity. As of February of 2025, the fund had about $230 billion in net assets. This is a large fund, showing it's a popular choice for investors. The portfolio turnover rate can suggest a more long-term investment strategy. Looking at where the fund invests, we see that almost all of it, 97.6%, is in equities or stocks, and mostly in real estate, which makes up 94.5% of the equity sectors. Then there's communication services for 2.9%. You need to know this allocation to realize the fund strategy and what's affecting the profits. The fund's top 10 investments include companies like Prologis, XIII, and Ventas. Prologis, a real estate investment trust, takes the top spot at 8.7% of the fund. It is followed by others, REITs such as XIII at 5.6% and Ventas at 4.1%. These top holdings tell us that the fund is betting big on these established companies. The fund's investments are largely in the United States, making up 72% of the total. The UK and Australia follow, each having around 7% each. Japan comes in fourth at 49%. This shows that while the fund is global, it's heavily focused on developed markets. Now, onto the numbers. Total assets amounted to about $231 billion. After subtracting liabilities, the net assets come out to about $23 billion. This is the actual value owned by shareholders. The fund had a total investment income of about $31.3 million. However, expenses including management fees, distribution costs, and other administrative expenses totaled around $10.5 million. This leaves a net investment income of around $20.8 million. The fund experienced a net unrealized loss of about $193.3 million from the change in the value of its investments. But it also had a net realized gain of $23.6 million. This means that the actual losses outstripped the gains that were made. Overall, the fund's operations resulted in a net decrease of about $140 on taking of $20. Over the 6 months, the fund's net assets decreased by $204.3 million. If we look at the bigger picture, we see that net assets were at $2.5 billion the previous year. This shows that the fund's performance has declined. The financial highlights give us a closer look at how each share class performed. Let's use Class A as an example. At the beginning of the period, the net asset value or NAV per share was $17.84, but at the end it was $16.37. That means that each share value went down during that period. The total return for Class A shares was negative 6.20%. This means that if you held Class A shares, you would have lost 6.2% of your investment, not including any sales charges. The expense ratio is the percentage of fund assets used to pay for operating expenses, which was 1.18% for Class A. The higher the number, the more of the investment gets ate up by management costs. The net investment income ratio was 1.47%. One affiliated investment of the fund is the MFS institutional money market portfolio. These money market investments are short-term, very safe, and very liquid investments. Similar to a savings account. So what's the story here? Direction assessment, the fund seems to be in a tricky spot. While it has a diverse portfolio and a strong base in the US real estate market, recent performance has been shaky. The unrealized losses are a major concern, overshadowing the net investment income. Risks and opportunities, the reliance on real estate and the sensitivity to global economic conditions pose significant risks. Changes in interest rates, property values, or economic downturns in key regions could hurt the fund. However, opportunities lie in identifying undervalued real estate markets, expanding into new geographic areas, and capitalizing on emerging trends. Conclusion. Overall, the MFS Global Real Estate Fund presents a mixed bag. While its size and focus on established companies offer some stability, its recent performance raises questions about its ability to deliver strong returns. That's all for today's Corporate Decoder. I hope you found this breakdown helpful. Now you have a clearer view of what's happening inside the MFS Global Real Estate Fund. If you enjoyed this video, please give it a like, leave a comment, and subscribe to Corporate Decoder for more financial deep dives. Thanks for watching.